Rajesh, hi, morning. Just looking at your earnings performance, while your Q4 profits have shown a very strong growth and FY19 also has been better than the previous year, what would you say have been the key performance drivers? And do you think this kind of performance is something that you'll be able to maintain or perhaps even better in the next few quarters?
Yeah, thank you so much. I think our focus will continue on the MSME side, where we are lending to underserved and underbanked customers while maintaining a high quality of our asset. And our focus is on the small ticket size of MSME and housing finance, which takes care of the good asset quality. We have grown last year, as compared to our last year AUM of about 28 billion rupees, we have grown to 41 billion of AUM, which means a 45% growth. We feel that this segment of MSME and affordable housing segment offers a high growth opportunity, and we are quite confident to grow this year also almost about 40 to 50%.
Okay. Mr. Sharma, tell us a little bit more as well in terms of how your company is different from the other NBFCs within the same space. Who are your key competitors in the space that you're currently operating in? Do you have any sort of a competitive edge?
So I think how we different is that we are focused on MSME and housing finance. We are not doing many more products. Our primary focus lies on the retail lending, where the 70% of AUM is comprising of retail lending of MSME and housing finance, and our focus is going to remain on the tier 2, tier 3 cities, where we are serving the customer who are creditworthiness, but because of lack of income proof or their document doesn't truly reflect their income, hence they are not able to get the funding from formal channels. That is going to be our focus area. We believe that this is a localized business where the policies of Gujarat may not be entirely replicable in Maharashtra. So everywhere the understanding of the profile and property is important to grow this business, and we believe that we have a deep, good understanding of our customer segment, which help us to give the quick turnaround time and tailor-made solution for their funding requirement. And that is our edge.
Now, there's a specific focus on increasing granularity of the book and lowering the ticket size as well. So just on that, given the small base and given your aggressive expansion plans to grow it as well, are you facing any challenges in the current environment, given the fact that the environment itself is looking a little tough at the moment? And also, when you're looking at this expansion, which are some of the geographies, for example, that you're looking at opening new branches in, for example? How will the product mix also shape up going forward?
Yeah, so our focus is, as you asked about granularity, our average ticket size in MSME is about 15 lakh rupees per customer. In housing segment, it is about 10 lakh rupees per customer. Even our segment of construction finance, which is we are doing a very retail way of doing construction finance, where we are serving the small developer in average ticket size is about 8 crore rupees. And we also serve in small way lending to small MFI, where the average ticket size is about 1 crore rupees. So this granularity is taking care of the risk and serving those customers again who are not getting the money from banking channels. Now the growth is going to come from increased number of the branches. Currently we are operating from about 84 branches in Maharashtra, Gujarat, MP, Rajasthan and NCR areas. We are going to add another 30 to 40 branches this year. So growth will come from the geographical expansion as well as the better productivity from sales and credit team.
I also wanted to understand, Rajesh, if you would be targeting any inorganic growth.
Inorganic growth, while we are not evaluating any opportunities, as you said, the sector is looking difficult for the small capitalized companies. If some opportunity come, we'll be open for that, but we are not looking aggressively in the market.
Now, asset quality has shown improvement as well. and on a Q-on-Q basis, even though the overall book is still quite new. Talk to us a little bit about, construction finance, any negative sentiment there in relation to the real estate sector?
Yeah, so construction finance, in the higher ticket size of the apartment, we are seeing the slow sales. So our entire strategy is to fund those developers who are tier 2, tier 3 cities and building a small building of 4 to 7 stories where underlying apartment selling price are not beyond 60 to 70 lakh rupees. Hence, they are little better moving and fast moving. And our entire strategy is to give the construction finance linked to the progress and linked to the sales of the project. Hence, this strategy is doing better, and we have seen that our delinquency are less than 0.20, which is the best in the industry. Our collection with these small developers is proving to be right. Our escrow mechanism and other things. So while the higher ticket size, big ticket size construction finance and real estate exposure might be in difficulty and might be facing some stress, but our experience with the small size construction finance in the range of about 10 crore rupees is proving to be very, very right.
Right. Now the promoter holding stands at about 74.9%. Will you be subscribing to the rights issue? And can you tell us, post the rights issue in QIP, how much are the promoters going to hold?
So this is the enabling resolution. We are not going to raise this money very quickly, but down the line, maybe after 6 to 9 months, we will see how we are growing, how the entire funds requirement will be coming up. We have at the moment very healthy capital adequacy ratio, about 34% in our NBFC and about 40% housing finance company. So we are well capitalized. So at the moment we are not very concrete about raising the money, whether it will be right or QIP. But maybe down the line, 6 months to 9 months, we will shape up this plan.
Okay, will you also be subscribing to the rights issue? And we talked about the QIP, of course, but the ALM situation, do you see any mismatches there? Anything you can share with us in terms of what percentage of your borrowings are short-term CPs or NCDs from mutual funds, the kind of breakup that exists?
Yeah, so interestingly, our company at Capri Global, we have not borrowed any money in commercial paper, and that has been very helpful in maintaining our ALM positive. Our ALM of 1 year and 5 year bucket is quite positive. The two reasons behind it: one, there is no short-term borrowing, and even at the end of FY19, we have NCD exposure, which is going to mature is about 10 months, is less than 3% of the overall borrowing exposure. 97% of the borrowing is from the banks, which is tenure is up to 8 years and quite long term and support our lendings. So there is no ALM mismatch as such, and that was the reason that because of our good asset quality and positive ALM, we are able to get easily bank finances. Even post September 2018, we got almost 5 banks to grant us the limit, and we are able to achieve our stated budgeted target of FY19.
Right. Thanks much for taking time out, Mr. Sharma, and giving us a sense as to your financials as well as the overall breakup, fundraising, and the quality of the company. Well, let's get right back then to earnings, and it's according to expectations.